In this video, Jim Cramer grades the latest round of Magnificent 7 earnings. Jim Cramer evaluates the earnings report of tech giants NVIDIA, Amazon, Meta, Microsoft, and Apple. Jim Cramer emphasizes the importance of long-term vision amidst the stock market's focus on quarterly results.
Well, some of these mega cap companies ace the report cards, getting what I can only describe as summas, at least in their orals, meaning the conference call. Let's start with the most definitive summa of all. Yes, the trillionaire that is Amazon. Here's a company that had been spending too much money to build out two-day shipping to the point where it was considered something of a slowdown story. Oh, not this quarter. Go to the head of the class, Amazon. They ended up laying off a ton of high-cost talent at headquarters while figuring out how to get your packages faster and cheaper to you. Fewer people plus quicker, less expensive delivery equals a gross margin bonanza. Meanwhile, Amazon's advertising business is on fire and its web services back in double-digit growth mode. Oh, by the way, thank you, Jeff Bezos, for ending your 50 million share sell program. And you're welcome, Dow Jones, for booting Walgreens and welcoming Amazon. Great call. How about Meta? Oh, this will be the quarter that Summa Mark Zuckerberg became cool. I know, kind of inconceivable. But have you tried the sold-out smart Ray-Bans where you can listen, talk, message, and snap pictures that go right into your Instagram? Have you been in the new Quest 3 VR headset, which to me is kind of like Jack Kirby's Fourth World? Yes, that cool. Meanwhile, the core business is incredible, and I'm slapping a $100 billion valuation on WhatsApp, even without fees. As we rue the denouement of linear TV, we realize that advertising is forever going to where it must go, to the people who actually want the product. And you can only do that online with the right technology. One word. Inference. Instagram is the king of inference. Hence the gigantic NVIDIA bill Zuckerberg must pay to get the job done. Summa. How about Magna? My illustrious college grade. All right, that belongs to Microsoft, which would have scored Summa if we hadn't recently heard a cacophony of mixed views about Copilot, the AI gateway. Hey, look, after an initial 5-star breakout ranking, I'm not sure what to make of the suboptimal responses of late to Copilot, given that I think it's incredibly easy to use, but maybe I'm kind of an outlier. Either way, Microsoft's cloud business, Azure, is so hot. Like smoking hot. You don't need to worry about this one. Just like Windows became the enterprise godsend to Apple's early dominance with the consumer, I am betting Copilot will eventually become the AI gold standard. We know this because CFO Amy Hood, who is so good, put a stake in the ground and told us that people love the product. If there's a tussle about how well it's being received, I'm going with Hood. She's a straight shooter. And she's got the numbers. The Gripers don't. Who else? Well, Apple didn't get the highest honors, no, but it did deserve the post-earnings regrading in its stock as the company managed to do the iPhone sales while continuing to rack up excellent service revenues. China remains the issue, though. And we've seen a pickup in some things selling in China, but I don't get too excited there. What people didn't understand, what they missed, what they'll continue to miss, is Apple's Vision Pro. I know. Okay, let's put them out there. It's expensive. It's boutique. It doesn't move the needle. There are only a couple 100,000 of them. Only Apple early adopters will buy it. The headset hurts. How do you work it anyway? To which I say, have you tried one? Yeah, I figured. Open your mind to what Masters of the Air would look like in the B-17, getting hit by flak, measurements blown by as you try to work the Norden bomb sight. Real life. That's the Vision Pro. Your pictures in panorama, your keyboard in the air, your knowledge that besides Max, Apple Plus, and Hulu, the other streaming services are going to fold because they'll end up being too much demand. And who knows if you can one day call up the new Apple Sports app free and press buttons for a big Miami MLS game and be blown away. The cynicism about this product is only equaled by the sales and hard-to-find availability, although we heard from the great Eamon Javers about how they have it in Russia and they're paying a lot more than that. I thought that store was innate demand. All right, so will it be the biggest thing? No, but it's in the right direction. Still, Apple's only an honorable mention. Why? Because China's just not so hot, and Apple's India business is still in its infancy, can't grow fast enough, retail infrastructure just not there. And the PRC weakness is a little breathtaking. Still, I say own it, don't trade it. But in terms of the Magnificent Seven, it was in the middle of the pack this earnings season. Alphabet's a true quandary. 2 quarters ago, Google Cloud hit some sort of wall, and the whole company's numbers were just widely panned. It was a wholesale nightmare. This time, Google Cloud got its mojo back. But the far more important advertising business was a retail nightmare.
A house of pain.
Yeah, talk about hitting a wall. I mean, this was just awful. It was nasty because advertising was very strong for Amazon and Meta. Hey, maybe Google isn't as useful as it used to be. It was a riddle wrapped into a mystery of an enigma. The soft quarter gives Alphabet a rude general studies grade. Given all the high-powered Stanford types working out there, it's a rude awakening, isn't it? I'd like to get more positive, but that'd be hard to do when YouTube and search are both advertising-based. Nothing's big enough to make up for that, even if Gemini's a hit. I actually found it depressing. Last but not least, earning a gentleman's seat, Tesla, which, by the way, is nowhere near the $1 trillion mark anymore, to the point where it's now weighs in below. Weighs in, you like that? Couldn't resist. Weighs in. Did it again in case you missed it. Eli Lilly. Oh, the indignants. Anyway, oddly, I want to hold back judgment for Tesla, or actually I want to hold back the student. With a new model coming out, I just hope we don't get a dreaded gap year from Tesla. This quarter simply didn't merit distinction, so I'm not giving it out freely, given even to Elon Musk, who rivals Jensen Huang as the brightest of this generation's Titanic business people, but is never confused with Taylor Swift. I don't like basing anything on a single quarter, even as the late Andy Grove, the toughest and meanest business person I ever met, said that when he ran Intel, it was perfectly legit to grade the company by the quarter. Here's the bottom line. To me, a longer-term vision is what's required. Too bad make or break is all that we ever heard during earnings season. Some of those breaks are buying opportunities, and nobody's ever made, at least not among the real winners. The good guys are always ready to play, and one day just does not matter that